Okay, the Dow was down 63 points, down 0.14%. The S&P was up 0.36%, up 24.5 points. The Nasdaq was up 0.71. The Russell was up 0.41%, and the VIX was down 1.68% at 1637. You want to be paying very close attention to the vote in the Senate just a little bit from now. Maybe by the time you watch this video, it will have already happened. It's going to happen at 5:30 Eastern Time, 5:30 p.m. Eastern Time. They're going to vote on the clean continuing resolution, the CR, once again. They're in the Senate. It's likely not going to pass. Continuing resolution is the stopgap to keep the government funded at the current levels, to give them time to finish the 12 appropriation bills that they're working on in Congress there, to get the government funded and everything all done. The reason why you want to pay attention to this, because if the Democrats vote against a clean continuing resolution, again, Trump is warning with his national economic director that if this vote fails here this evening in the Senate, that Trump is going to likely start ending up going forward with mass layoffs. Okay, how will the market respond to that? How will Bitcoin respond to that? Concerns about the labor market, an already fragile labor market, concerns about consumer spending, concerns about the GDP going forward. So these things could cause Wall Street to be concerned. Just something worth really paying attention to. You have the Nasdaq, the S&P, and Bitcoin all at major resistance, with all of them extremely overbought. So pay attention to this vote. Pay attention to what Trump does maybe later this evening, maybe on into the Tuesday session. We'll be watching to see what happens. Now, again, White House is saying if no progress is made, we're going to start seeing mass layoffs. And again, we could see programs on the chopping block. We could see agencies eliminated. Could this be a catalyst for the stock market? It's something worthwhile paying attention to. So watch this vote just a little bit from now at 5:30 p.m. Eastern Time. They'll bring the clean continuing resolution to a vote again, and we'll be watching. It's likely not going to pass. If it doesn't, does Trump do something that ends up rattling the markets? Do we start seeing the mass layoffs? Do we start seeing a dramatic downsizing of government? And again, a lot of these jobs can be permanent job losses if the Trump administration chooses to go forward with that route. So pay attention to this. Please support the channel with the link directly below. If you follow the link, it'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. I don't have any sponsors, just a direct relationship with you. So thank you for your consideration for that. And in this video, I'm talking about the Senate vote that's going to happen here shortly. Probably by the time I get this video posted and processed, the vote will already be happening or be done. This is something that could move the market, and I'll talk about that in this video, if Trump begins mass layoffs. We're taking a wrecking ball to the size of government, could cause Wall Street to be concerned. Something we're paying attention to. VIX is still above the 50-period moving average. It's just going sideways, but it's still above it. It was down today, but it's still above it. You've got the tightening of the bands. You've got the MACD in positive territory. This warning, we could see a dramatic surge in volatility. We had the tightening of the bands over here. The MACD got in positive territory. You got above that 50-period moving average with that surge here. You're holding above the 50-period, and we've broken this trend line right here, broken out of a little falling wedge. The S&P moved to new highs on Friday. The VIX is not moving to new lows. The VIX got a hollow red candlestick here, just like we got a hollow red candlestick over here for the higher low. The VIX is not moving to new lows. The S&P is moving to new highs. There's a discrepancy that often can mark turning points when there is a discrepancy. Divergence is due well, but when there's a discrepancy, it can be associated with a bigger sell-off, a bigger turn for the market. Again, when we had these things present back over here, we had the February sell-off and the S&P dropped 21%, the S&P in the lower window here. So again, we'll be watching to see what happens. But again, this is a huge warning sign. The market's just kind of drifting along into our trend lines of resistance and then turning off of them and then going back and hitting them. And that creates this massive complacency. When this thing starts surging, when volatility starts surging, it's going to shock people. You're probably going to see a pretty dramatic, very quick and dramatic sell-off in the market. This is like a pressure cooker, like a volcano that is getting ready to erupt. When it does, you're going to see volatility begin to surge above the 200 period, above this trend line, and you're likely going to see a push above 20 and probably move towards the 30s or 40s, depending on how big of a sell-off we end up getting. But you're probably going to see this thing really begin to get a massive surge with these wide range bars like we had back over here and over here. Just be aware of that. Oh, it hasn't happened yet, and so it's not going to happen. This is the same stuff that they were saying back in December, January, and February when the market was forming that divergence the last time around, and it ended up being a violent sell-off that caught most people off guard. So we'll be watching the Senate vote. We'll be watching to see if Trump does anything Monday evening or on into Tuesday or at some point later this week, but we'll be watching the VIX. In the Senate, we have another divergence here between the S&P 500 and the 5-day moving average of the put-to-call ratio. Again, this is at extremes, showing total complacency. This is what we had back over here at the February top. This is what we had right over here at the July peak, which didn't last very long, but one of the bigger sell-offs through this run-up. You got another divergence just very similar to what we had right before the February sell-off. So again, another red flag here with the put-to-call ratio. Option traders overdosing on calls, absolutely no interest in puts, which are short positions. And again, that's often when you see turns in the market when the option traders get to where they're overloading on calls rather than puts. These extremes up here with the raw data have marked bottoms, short-term bottoms. Another red flag, huge warning sign today on the put-to-call ratio today. P500 has rallied up into major resistance on Friday there, and we saw a sell-off giving us a candle of indecision. We rebounded back up, gapping higher today, gapping higher, pulling back, filling the gap, and then getting a rally back up for a lower high, at least so far, forming another divergence and selling off towards the end or the latter half of the session. If we are going to sell off, you got to take out the 200 period here in the 5-minute time frame. We've been bouncing off of it as of Friday's low, and then again as of today's low here on Monday. So again, if we are to sell off a lower high to get a lower low to come back and take out this level, you've got to drop below the 200 period and remain below it. You're at major resistance though. So again, watching to see what happens here. We had bearish divergences on the 5 and 15-minute chart. On Friday, we sold off. We came back up. We actually broke this little trend line right here in the 15-minute time frame and came back up and back tested it a couple of times. I've drawn a trend line from these lows right here, and that's right where our 50-period moving averages here in the 15-minute time frame. We did have a multiple point divergence here in the 15-minute time frame, and now possibly a lower high as the MACD rolls over here. If it goes negative, you come down here, you break the 50, you break the cloud, then again you're likely moving back towards the 200 period moving average. You'll have a lower high, lower low here. Does that start a possible reversal? We'll be watching. We now have divergences in place here on the 60-minute chart and in the daily time frame. Here's the rising wedge right here on the 60-minute chart. We had one previously with the September run-up. We broke down, but bounced off support, the May trend line, and could not get a reversal. Similar divergence on the MACD as we have on the RSI. And the stochastic becoming overbought again. So If we do end up selling off, again, watch the 50 and the 60-minute time frame, watch the cloud, got to take those levels out, and the 200 if you're going to get a bigger sell-off. Last time we bounced off the 200, and prior to that we were bouncing off the 200 period moving average. It's held as support through the run-up. If we are to sell off, you've got to take out the 200 period moving average here on the 60-minute chart. Friday, the S&P got that little topping tail, and that's what gave us a sell-off there on those intraday charts that we formed little divergences, and we turned down off of this trend line right here from these previous highs. You've got a divergence now in the most recent price action. You've got this larger divergence going back into the summer from the July peak, multiple point divergence. You've got this massive divergence on the MACD down here, and again in the more recent price action as well. I don't have it marked on this chart, but others I do, and again a little divergence right there in the more recent price action. If the MACD rolls back over, you could turn down. We're getting a candle of indecision. We're getting that topping tail on Friday. We've got the stochastic rolling over with its own divergence going on there. So again, if we do see a reversal with this divergence on the RSI, watch to see if we take out the 10 and 20 period and the momentum cloud there. If you take those levels out, and the blue line is the 20, the 10 is the red, then you have your 50 down here, you have your cloud and your 100 down here, and your horizontal support there at 61.50. Below that, you've got your 200 period moving average. Those are the levels I'll be watching if this divergence plays out here at some point this week. Price is doing what it did over here. It just remained elevated in a divergence for an extended period of time, just like what we had back between December, January, and February. It just remained extremes. But then this followed. You had this 20% drop very quick, 21%, pardon me, drop rather quickly. I don't think we're going to take out the April low yet, but I do think we're coming back to some of these levels. But again, when you get these kinds of divergences like we had back in February and like we have right now, it creates total complacency. And then when it happens, a reversal or a pullback starts, then people are shocked. Just be aware of divergence as we're slamming up into the trend line from these previous highs on the S&P. We're still likely carving out wave 3, wrapping it up, and again probably going to see a wave 4. If we get a 10% move to the downside like we did in July, then you're looking at moving towards the 200 period moving average. That would take us back towards the 6,000 area. Just if we go and get a sell-off similar to what we had with the summer sell-off 2024. NASDAQ at that time dropped nearly 16%. We could see something similar. It takes out the 200 period moving average. If we break this trend line right here, then this rising trend line, which again is forming this very steep rising wedge, if we break down with that below the 20 period, you'll break the trend line and you're likely getting a primary wave 4. The S&P up close, you got a topping tail candlestick there on Friday just below the upper Bollinger Band. Here we made a lower high and you get a candle of indecision in the form of a spinning top. So again, I'm going to be watching. Do we go down and try to take out the low of Friday's bar, get a lower high, lower low on those intraday charts, or do we try to challenge the high here with the candle of indecision? Candle of indecision can be a continuation or a reversal bar. So again, be watching as we're at key resistance and forming the negative divergence on the RSI. These divergences are likely wrapping up, as I talked about over the weekend, wrapping up into major resistance. Here you also have a divergence on the MACD. Again, you can see it up close right here with the larger divergence. If we look at our weekly chart of the S&P 500, we are slightly overthrowing the trend line from the 2018 peak, the first peak in 2018, connected to the 2022 top there in January, and we're slamming up into that level and slightly overthrowing it, and we're hitting the trend line here from the 2023 low. If I bring it up close here, you can see again this trend line going up. We slammed into it the previous 2 weeks. Here we are right at it, just under it. Last week we tried to get above the 2018 trend line. The blue one right there came to just under the red trend line, which other parallel channel And again, we're right there, again, directly under this blue trend line from the 2023 low. Yet again, this is the weekly chart. We got major resistance right here. Do we get rejection at the blue 2018 trend line and this 2023 trend line here and turn and come back down? And if you do turn off of the trend line, I'll switch to the daily chart here, S&P daily chart. You turn down off of this trend line right here. You're turning down off of resistance. To confirm that move, you got to break the trend line from the May low here. The May low connected to the June low, connected to the August 1st low, connected to these lows here, just slightly came short of it there, and then we breached it here but closed right at it. So here in late August, and then just recently we hit it again right here in late September. If you come back and you get rejection off these levels and you break that trend line and the other trend line going all the way back to the April bottom that I'm showing you in this video, you break these trend lines and you'll get a bigger sell-off. But this trend line has acted as support. We've tagged it 1, 2, 3, nearly 4 there, 5, and now 6. We've tagged it 6 times. If you break it, you'll likely open the floodgate of sellers. If that happens, could it be surrounding the government shutdown? Could Trump end up rattling the markets? Maybe. That could be the catalyst, something I'm certainly paying attention to because of what happened with Bitcoin with the last government shutdown. Remember, the last government shutdown, the S&P was declining. It had declined 20%. Here we've risen and been in an uptrend since the April low. So does the government shutdown end up rattling markets? Maybe. This time could be different if we see mass layoffs and concerns about the labor market, concerned about consumer spending, concerns about GDP. Just pay attention. Just vote. And by the time I post a video and you watch it, the vote likely will be happening or already happened. So pay attention to that outcome, the outcome of that vote in the Senate. Broadening formation. Here, this is our linear scaling. We're slightly overthrowing the trend line from the 2020 low. But every time you've hit this trend line, you've seen a significant sell-off, 16% in July of 2024. I mentioned that with the S&P 500. It had dropped 10% at that time. NASDAQ dropped nearly 16%. If the S&P were to drop 10%, it would move back towards its 200 period moving average. If NASDAQ were to drop 16%, it would move back below its 200 period moving average. But every time we've hit this, 16% drop, 26% drop. Here we are again. We're slightly overthrowing the trend line. This is our linear scaling. You're slamming right into it, though, with the log scaling. And you can see the broadening formation. That's what I've marked in the daily time frame. Likely we're going to see a significant sell-off. Again, it could be 16% or possibly more. Well, the S&P made a lower high today. We got a higher high with NASDAQ. A candle of indecision on the S&P in the form of a spinning top. We got a doji on the NASDAQ. NASDAQ moved to a new high. And sometimes they diverge at turning points in the more recent price action. Sometimes you get larger divergences between the two at turning points. But sometimes it's just a day or two. Like right here, we're going to a new high on NASDAQ. And by the way, NVIDIA is not making a new high. It's also diverging with NASDAQ, which could be a warning sign. We've got this divergence going on here. We went higher. We got a candle of indecision in the form of a doji. We got that black candlestick on Thursday. No confirmation. We had a down day on Friday, but there was, no decisive push below that low of the candle. We closed just right near that level, and now we get this doji with our diversion still very much in play here on the RSI. The MACD also has that divergence. We never did get the MACD rolling over like the S&P did. That's forming the divergence here. We still have one, but the MACD did not roll over previously, but you still have a divergence in the most recent price action as well. So again, we're probably going to see when this sell-off happens, it's probably going to be a doozy, possible divergence with NASDAQ and S&P as NASDAQ slams right into the trend line of resistance in the log, in the daily time frame with our log scaling with this doji. Dojis could be continuation or reversal bars. As I said over the weekend, we were just slightly under this trend line of the upper boundary of the broadening formation with our log scaling. You got a massive broadening formation on the NASDAQ 100. We were up 0.78% today, up 0.78%, up 193 points, but you're slamming right into this trend line. You got negative diversions on the stochastic rolling over now today. You've got the diversions still in play here on the RSI, and you've got this massive divergence on the MACD with a massive broadening formation. And each time this trend line's been hit, again, you've had a major sell-off, a significant sell-off. This time will likely be no different. If we get an October sell-off, you could still see a run-up in the fourth quarter, maybe on even into the early part of the first quarter of 2026 into January or something. If you try to reach the trend line again, should we turn off of it here, having major resistance, you're hitting major resistance with these negative divergences. And again, today a candle of indecision ahead of this vote in the Senate. White House saying that they're going to go forward with mass layoffs in all likelihood if this vote fails, which it is likely going to fail at this point. When we initially rallied with the start of the government shutdown, we could end up seeing a sell-off as it moves along, as the two political parties continue to battle it out. Eventually, it'll get resolved. It could go on possibly for a few more weeks if they don't come to an agreement. So just something worth paying attention to. It's likely going to be that you're going to see a massive sell-off off this upper boundary. This is likely the topping pattern for the NASDAQ that will eventually usher in the bear market. NVIDIA's got the same pattern. Right now, NASDAQ's made a new high. NVIDIA has not moved back up, turned off major resistance. And what happened back over here in June and July, NASDAQ made a new high. NVIDIA made a lower high. They diverged, and we ended up selling off sharply with both. Today's rally completed a divergence in the more recent price action right here. Larger divergence with this previous peak back over here from September, the September 23rd peak there, and you've got this divergence. Again, if we're going to sell off on the 60-minute chart here, you got to take out the 50 in the cloud and move back and try to take out that 200 period. This is where we found support down over here in August, and then again in early September before the September run-up. So again, if we're going to sell off, you got to take out that 200 period moving average, and then the 50's got to drop below the 200 period. But you've got these divergences here as we're slamming into the upper boundary of the broadening formation, the trend line from the 2020 low in that weekly time frame. In fact, have that divergence on the 60-minute chart. It completed it today with the rise, forming the candle of indecision, but we've got it here in the 15-minute time frame, just like the 60-minute chart. Now remember, S&P already got a divergence, and it got a lower high today. NASDAQ got a higher high, so they are diverging, something worth paying attention to ahead of this vote in the Senate with the divergence on the MACD also. This divergence gave us the breakdown of the previous rising wedge. Now you've got another one here on the 15-minute chart that you can see here. 15 and 30-minute chart has it. NASDAQ 15-minute chart here. At some point, when floodgates are opened here and the selling begins, it's going to be, in all likelihood, very dramatic. You have this consolidation, bearish divergence, just like we had in February, and then it was dramatic. You have the VIX. The VIX is building momentum like it's a pressure cooker about to, blow its top, and it's just building and building. We got the doji. We're slamming up into this trend line right here from the most recent high here. This peak right here connected to this peak right here. And then we have upper boundary, the broadening formation that we're slamming into right now with our log scaling and the divergence here in the daily time frame with the RSI. So here's, again, this larger rising wedge, showing you some smaller ones in the 15-minute time frame. Here it is up just a little bit closer. We see the reversal again, potentially a wave 4 followed by a wave 5. Stochastic is rolling over today, forming its own divergence in the most recent price action, along with the MACD and the RSI, which have a divergence in this most recent price action here, pushing up higher with our doji today for the NASDAQ. Be watching if the government shutdown continues. Do we end up getting a breakout of the bullish falling wedge with the 10-year yield. Does the dollar start rising? The 10-year yield rose by 1% today. The 10-year yield has already bottomed. The market is making new highs. We're not making new lows with the 10-year yield, so there's a discrepancy here as well. And again, oftentimes when the yield rises, the market will begin to fall if they have a negative correlation, which is more often than not. With the government shutdown, pay attention to the bullish falling wedge, and we've come right up to the trend line here today with the 1% rally here today. Do yields start surging, and does it rattle markets if that happens surrounding the government shutdown? Maybe the actions taken by the president, the mass layoffs. Yields rise on, what they'll say, oh, the government is going to default or whatever, concerns that the government's not going to be funded and all this other stuff. The politicians are going to work this out, but again, it could rise. If yields rise, it could be an excuse for the market to sell off. If the negative correlation takes place, which again, the S&P is moving to a new high, the 10-year yield is not moving to a new low, that negative correlation. We still have a Dow theory sell signal. The Dow's moved to a new high. The transports is not. They're diverging. This is a huge red flag. You have a massive, larger divergence also, but the one in the more recent price action is suggesting we'll see a sell-off. Dow moved to new highs. The transports did not. That's a Dow theory sell signal. Dow theory bullish buy signal marked the bottom with the Dow making a higher low, the transports making a lower low. Often diverge at tops and bottoms.